Subscribing. Hey, welcome back to LR Options, and if you're new, please consider subscribing. In today's video, we're going to be going over why I feel swing trading is the best way for a beginner to participate in the stock market. It's a less stressful way to keep an eye on your stocks and on the stock market. As a beginner, you're going to pick stocks that have a consistent record, steady movement, whether that's up or down. And the best stocks are those that are low in volatility, so you can avoid the huge swings in price. Choose to enter your stocks when activity in the stock market is low. So don't trade first thing in the morning. As soon as the stock market goes on, that's when when it opens. That's when volatility is at its high. All right, so this is when price action is racing everywhere, and you're liable to panic and close out your position before you should. Okay, so if you like so far what you've seen in this video, please subscribe so we'll be able to bring you more videos of this kind. Thank you for that. And let's look at an example of what happens once the stock market opens. And this is why it is so important to know the stock and look at the stock first that you want to trade in and you want to enter into a swing position in. That means that you want to hold it for a few weeks, maybe a few days, a few weeks, a few months. You just don't want to jump into it and jump back out of it quickly. So over here we're looking at Apple, and as you can see, Apple stock is going up. So it's been going up consistently. Okay, so let's see. Yeah, so what you want to do, you want to invest in this type of stock. So you don't want a stock that's here going up for 2 days and then it's all the way down for another 2 days. You want a stock that's been going up consistently for months. Okay, or the other way around. You might want a stock, you might want to trade puts. So you might want a stock that's been going down. So anyway, so to enter a call trade for a stock that's been going up consistently, okay, after you studied a few stocks and you choose the one that you want to enter in or the ones that you want to enter in, okay, you want to wait until the market, the stock market is open, but you don't want to enter into a stock first thing in the morning, because that's when the stock market it's at its most volatile and the prices are moving everywhere and they're moving very fast. And we're going to take a look over here at the stock market a few weeks ago in January, and as you can see, this is when it opened up over here and right here. First thing is Apple did, it jumped from 168 all the way up to 171. Okay, so a beginner in trading is going to see that, and you know, that's a lot to take in at one time. It's very intimidating because then you see the stock go down the next minute. Okay, so it goes up a few points and it comes down a few points. Now, as a beginner, you're probably thinking, oh my goodness, now the stock is going down. After I saw the stock going up consistently for a few months, what am I going to do? Blah, blah, blah. Or let's say they entered into the stock already. Now they're looking at it for a few minutes and they see that over here at 10 o'clock in the morning, the stock is down already. Let's say they entered over here at 171. Now at 10 o'clock, the stock is at 169. So they're thinking, oh my God, I'm losing money, blah, blah, blah. So they're panicking. And they might even close out the stock. All right, and lose money. So what you do is you don't trade as a beginner. You do not trade at the onset of the market. 9:30, that's a no-no. That's not good. That's very intimidating, and I don't blame, I don't blame beginners. It's very, very intimidating. I remember when I started trading stocks, and yeah, it's very intimidating. So what you're gonna do is once you've chosen your stocks, you're gonna wait until the middle of the day when stocks calm down. And we're over here, we're gonna let's look at the previous day. This is a Monday. Okay, let's look at Friday. All right, now look at Friday. Okay, look at the difference. Prices are ranging. They're not jumping all the way all around. And it's easier to know when you can enter your stock. Okay, let me see if I can get rid of this drawing pencil because it's messing up I can't move the charts. Let's see if I can get rid of it. All right, move. Let's see if I can remove this. All right, we still can't move it. Okay, so here we can look at Friday. This is the middle. Let's see, the middle of the day on Friday. You see how the stocks are ranging. So it's easier to have a better, idea when to get into the stock. Here we are Thursday. Here we are Wednesday. Okay, the middle of the day when the stocks are quiet, that's the best time to try and jump into the stock. Okay, so now we see why swing trading gives you a chance to observe and get to know your stock. For instance, every stock has patterns that you can trace and follow. One example is, how does your stock react to news? Many stocks change their movement according to the news. This way you get to know your stock's, so to speak, personality. Even every stock has one. The longer you observe the stock, you get to know its during the weeks and even months, the more you get to know and understand its movement. After a while, you get to know which stock strategies work best with your chosen stocks. Okay, so to summarize, we go into why swing trading is best for new traders. We spoke about it's easier to observe your stock's trading patterns. Number 3, it's best to trade when the market is quiet. And number 4, swing trading allows you to get to know your stock's reactions to news. Okay, so we're going to end the video here. Please comment, share, and subscribe. And please let everyone know what we're doing here at LR Options. Thank you.